joining me today. My name is Wesley Boudreau, one of the financial advisors here at the Retirement Group. Today I'm going to give you a really quick kind of a mid-quarter update and how the interest rates are affecting the calculation for the ExxonMobil pension lump sums. Now we're kind of transitioning into the second quarter here in just a moment, but we just got the interest rates updated for February for the segment rates, which gives us a good idea of what the potential impact is going to be for the third quarter. And a lot of you are pins and needles because, again, we've seen some high inflationary pressure over the last few months, and we continue to see that going forward, which is going to make some drastic changes to these lump sum calculations. Now, a quick reminder, the ExxonMobil pension plan is a classic defined benefit plan, in which case there's a formula to calculate out your annuity. From there, if you want to take the lump sum, you look at interest rates and your life expectancy to determine how much you get from ExxonMobil. When interest rates are lower, they give you more lump sum, a higher lump sum, because the interest rates are so much lower for you to go out and try and recreate that annuity yourself. When interest rates go up, they don't give you quite as much. So think about like a mortgage. When interest rates are low, you're going to actually afford a bigger house. When interest rates are higher, you're not going to afford quite as big of a house. So right now we're in an environment where we're seeing interest rates not just go up, but go up drastically month by month, which is going to affect that third quarter rate as we see that coming down the pipeline. The way that Exxon does is they look at, there's two different rates, whether you're grandfathered or non-grandfathered. The grandfather employees who have been there longer actually have a better interest rate, which follows a 30-year treasury. And if you notice here on kind of the right-hand side, I've got the third quarter highlighted at a 2 or 2.25%. We won't know until another week or two once March wraps up, and we'll have an idea. But right now we're averaging at 2.11%, so we're very close to that point where Exxon can round that up to 2.25%. I know I'm working with a couple of grandfather employees right now. We're looking at pulling the trigger for second quarter anyway, but now we're definitely going to be doing it because we're going to see a pretty big jump in that third quarter, which will cost them quite a bit in their pension lump sum calculation. If you're not grandfathered, you're looking at the Pension Protection Act segment rates, which are going to be three different segments. There's going to be the first, which follows the first 5 years of retirement. Second is going to be years 6 through 20, and the third is going to be years 21 and beyond. So for most of us, that middle segment is going to cover 15 years of retirement, which is going to have the highest weighting when we look at that calculation. The way Exxon does is they look at the average of the last two months of the prior quarter to determine what your actual average is going to be. So let's zoom in here and look at that first highlighted field, that second quarter of 2022, which is what we're moving into right now. That's based upon the average of November and December. And you look at that as a simple average in the second segment, it's 2.72%. The average right now in the first quarter is 2.53%, so that went up by about 20 basis points, about 19 basis points there. The one I want you to draw your attention to, though, is below that big 3.35% that we're seeing in February. That is actually going to tell you what we could see the interest rates start to average towards for the third quarter, because we won't know until we get the March and February rates to determine what that average is going to be. But so far, February rates are 3.35%, which is drastically higher than that 2.72%. Now, if we look at the 10-year Treasury, which is a good indicator, and we look at that going forward, and we look at how March is done, March opened up at 1.72%. It's already up to 2.38% as of today. So more than a 60 basis point climb. So if we kind of stay in that trend, it's likely we'll see March interest rates even higher than February interest rates. So we could see this thing go as high as 3.4, 3.5% or something like that. And something that high, we're already going to be probably 50 basis points higher. We could be 60 or 70 basis points higher. But a 70 basis points higher would equate to probably about a 7% decline that you would see in your lump sum calculation from second quarter to third quarter, everything else held equal. Now keep in mind, there are different options like age penalties and things like that depending upon your age. But just looking at interest rates, it's going to be a pretty drastic and probably the biggest change we've ever seen in the history since the segment rates came out of a decline in lump sums. So a quick example, simple math, if you have $1 million lump sum right now, and let's say the interest rates go up by 50 or 70 basis points, you're going to lose anywhere from $50,000 to $70,000 in that calculation. If you have questions, want us to run the numbers for you or show you where to run that calculation, we can do so. But ultimately speaking, anybody who's on the doorstep of retirement or even 2 or 3 years out, give us a call so we can run these numbers so you have an idea of where you stand, and make sure you're not caught off guard in some of these changes that we're seeing taking place. Now again, just give us a call at 1-800-900-5867. We'll be happy to go through this with you. We'll be happy to run it through a cash flow analysis to show you how it's not affecting you just now, but also in 10, 20, 30 years down the road. And keep in mind with Exxon, if you're taking the annuity, the lump sum calculation doesn't matter whatsoever, so the interest rates won't matter to you. But again, Exxon gives you that choice of the lump sum, the pension as an annuity, or a combination where you can split it up as well. So again, give us a call, 800-900-5867. You can reach us at info@theretirementgroup.com. Or if you're tech savvy, you can go ahead and hold your phone up to the QR codes on the screen. Once you get into an appointment with myself or one of the other advisors in the office, or the other is going to be to follow us on LinkedIn. So you're rest assured you're updated timely on the information we have on Exxon, company changes as well as interest rate changes and things like this. But at the end of the day, I want to remind everybody again, we are not affiliated with nor employed by ExxonMobil. However, we've been working with employees and retirees quite extensively for many years. We have a deep understanding of not just the pension plan, but also the 401k and healthcare retiree benefits. So any questions you have, just give us a call. We'll be happy to help you out. I want to thank everybody and I hope you have a great day.